So guys, a wonderful good evening to everybody and welcome to our Admiral Markets webinar, Master the Markets. I'm so grateful that you'll be a part of that you're being here in this webinar, and I hope we have a great time. Thank you very much. We have a great time. To the next minutes, I have a question. Link, hello, everything is fine in Chenzo. Thanks for that response. I hope you're doing good to everybody wherever you are, and let's see what happened in the market. It's exciting actually in the market. So many things happened the last day and today especially, and let's see what happened and what's about our trades in here at Admiral Markets. Okay, let's switch through the first slides here. The risk disclaimer: you're not trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to that complex nature. So before entering into client agreement or making transaction, please make sure you read the terms and conditions of our service. This presentation and the accompanying video is for information and educational purposes only, and online educational materials are developed by Admiral Markets and distributed by Admiral Group Investment. So therefore, please take into consideration that the information in this session may not be suitable for everyone. So you know all that words, you are responsible for your own trading. And about ESMA, since August 2018, we have this difference between retail clients and professional clients. Here you can see the restrictions about the leverage to 130 or 120 about other currency pairs and CFDs on indices and gold. So let's see your options between retail clients and professional clients. You can see it here in that slide, but I guess you have all this information. This is a very important slide, why you have to choose Admiral Markets, because we have the best index offerings and typical spread of 0.8 points during the main trading hours. No minimum stop distances or requotes in trading. That's really important for your trading, especially with our entry at stop buy or stop sell. And one world and global offers. You can open your account wherever you want. And this is our first slide about trading. So success, guys, is not a fantasy. It's a clear formula. And this is one of the easiest trading approaches you can have ever. This is nature of trading. It means we trade a trend. At the end of the day, it doesn't matter what happened at the day. At the end of the day, you can always recognize a trend. Always, in every time frame, in every underlying, whatever you trade, at the end of the day, it means a trend. And the trend continuation is always more likely than a trend break. And you see the probabilities for a trend continuation is around about 65%. And if you make sure that you have the big picture or the upper trend in the same direction, or at least as a support by divergence or by support and demand, it rises up to, the probability rises up to 72%. And I guess this is enough to make trades and to become successful in trading. But as you can see about the numbers, if you use Fibonacci market profile, I will show you very soon in the market overview, it rises up to around about 80 or 85%. But I don't care, and it doesn't matter if you use 65, 72, or 80 or 85. You will never have 100% in trading. And this is one of the most important expressions what you have to realize in trading, that you will lose money in trading. Whatever you do, you can stick to the rules. You can have the best trading approaches ever. At the end of the day, sometimes you will lose money. And that's the reason why so many people failed in trading, because they cannot accept that part of trading, because losing money, even you stick to your rules, is part of the game. For that part, you have your risk and money management. But you have to accept that inevitable thing that losing money is part of the game. And that's not a problem. If you stuck to your rules and if you be disciplined and the market will run into your stop, it's a decision of the market. It's not your fault. And this is what you have to realize in your mind. It's not your fault if you lose money as long as you stick to your rules. And as long as you don't switch the stop or put it far away or switch it away, as long as you stick to your rules, it is not your fault. And this is one of the biggest challenges in trading ever, guys, ladies and gentlemen. It's always the same. That's not the way we are educated. If you make mistakes in your life, you will get the receipt about that. It has consequences. But if you stick to the rules, maybe you drive not too fast on the street, you go not over the street if you had a red signal, nothing happened. Everything is fine and you will never have a punishment. But in trading, it is not the same like that. And this is the great challenge why you have to switch your mindset. You can everything do right or in a correct way in trading. You can have your rules. You can stick to your rules. And sometimes you will lose money. But please realize that. Take a paper, take a pen, write it down. As long as you stick to your rules and you will lose money, it is not your fault. It's a part of the game. And if you have your rules statistically proven positive, of course, on the long run, you will make money. But on the short run, you have to accept that you sometimes will lose money. But as long as you have your correct money management with your own penguin factor, where you're feeling comfortable about the money you will lose, maybe sometimes you will say, okay, I risk 1% of my account. But what means 1%? What's the money, what's the value behind 1%? For sometimes it means 50 euros or $50. For the other one, it's mean 100. But if you say I risk 1%, if you're feeling comfortable with the value behind that 1%, would you take that value and would it give any man on the street who is back on the street? Would you give that amount from free of your heart, that guy? Would you do that? Or wouldn't you do that? That's your penguin factor. What's your value? What's your value you would throw away without any punishment, without any hurts or pains? What's that value behind that? And that's your penguin factor. If that factor too high, you will always be in danger to intervene into that trade, to put your stop away, or to intervene to have senseless actions about your trading. And that's so many points you have to figure out in your trading. So what's your real penguin factor? And that is the point why I always say stick to the rules and use really easy rules for your trading. Because the real challenge is taking place in your mind and is placed on completely other things like penguin factor, like money management, risk management, and so on, and trade management. And today we have a really difficult day, because today we lost 3 or 4 trades in a row. I will show you now. So that's the rules we have to stick for, and we have to stick in. You know, rule number 5 to 7 means where we are in the trading. Are we outside of the fair value zone? Where is our target, Fibonacci, market profile, and where we are about the big picture. Are we in the move? Are we in the correction, or are we have something else in the big picture? And rule number 1 to 5 means how you can get into a trade. You need a trend, you need a young trend, you need the correction, you know, accumulation phase, outcoming of the correction, at least 38%, and we use balance candles for our entry, because the balance candle shows you, okay, that we have a balance of supply and demand. And with that in our mind, we see what's happened since our last webinar. So maybe you know we had Australian Swiss franc. As you can see, finally we are out of the trade. So it was a zero game. And at the end, it was a little bit of winner, because we have so many value of swap costs on our side. We had an entry based on our rules. We had our first target reached, and then we were stopped out here at that point, because I knew we will see lower prices, and that's the point I decided to get out of that trade. Thanks God, because after that we had more losses, because I could realize that we have a smaller trend underneath, or within the bigger trend, the bigger uptrend, and that's the reason I decided that. And about the seasonals, we saw a little bit falling prices. About here, you can see the price went down. So that was the point I decided to close that trade. At the end, with the first target and with our swap costs on our side, we made a little bit money. So it's our end out in Australian Swiss franc. So let's see. We have still 2 trades running. First of all, Swiss franc, Japanese yen, and this was really exhausting, because you see we had a trend. There was our balance candle. We got into that trade, and after that we were a little bit in the plus. And since then, the price extended the correction sideways. And today, with the drop down of the market, the Japanese yen reacted and got really strong, because that's the correlation between the indices and the Japanese yen. So you know, maybe you know the word. The Japanese yen, Swiss franc, gold is called safe harbor. And here we are. The price switched from the indices to the Japanese yen. If you have falling indices, you have a strong Japanese yen, because the big money is switching from the indices to the Japanese yen. And if you have strong markets, the markets switch out of the Japanese yen back to the indices. Risk on to risk off and back. And that's what happened today. And it was a lucky decision that I didn't switch the stop up. So I said I work always with a mental stop below the last 0.3 here. So, and as you could see, yes, we had a little bit close below that. But at the end, the price went up again. So we saw today the recovery of the indices, and at that moment you could see the price switched again from Japanese yen back in the indices, and that was the point why the price went up again, and I'm still in that trade. And as you can see, we are so far, so deep and so far in the green zone. The point of control here is placed at 111.54. So we have so many pips to go. And that was the reason why I decided to be a little bit more comfortable and a little bit more wider with using my stop here. But it's about in the edge and in space of my money management, and everything is fine. So we are still in that trade Swiss franc Japanese yen. So which indicators have you added on the chart, Farouk? This is the market profile indicator. This market profile is like the volume profile, but you see in Forex, you don't have a real volume because you cannot have a look at the book map, because in Forex market doesn't exist a real book map. So every bank works with its own book map, or order book, I mean, and they work with liquidity pools. But at the end, they trade it. And this means the tick volume. Every tick, so every trade of the Forex market is added and to each other. And at the end, you see this market profile. And the market profile will shows you where is the fairest price about the highest volume. This is the called point of control. And it's the red line. And around the red line is called the fair value zone. And around the point of control is placed 70% of the highest volume. And that's the border on the upper side, point of high, and the lower side, point of low. That means green zone means unfair price value, upper green zone, unfair price value, and red zone is fair price. We don't make trades within the fair price. We always make trades outside, because the behavior of every kind of prices is go back to fair price. And if you will follow me through the webinars or on my other project, Battle of Titans maybe, then you can see how we will work with that, because trend and price are the most natural things in trading. And prices will always go back to a fair price. It's like you will buy some stuff in your store. Sometimes you have too expensive prices because it's outside of the season. Sometimes you have special offers, but either the high expensive price nor the special prices will take forever. Maybe for 1 week, for 2 weeks, as long as the season will take. But at the medium, you will have a fair price where you say, oh, it's okay, the price. And it's the same, you trade prices in trading at the market. If you trade shares or futures or Forex or commodities or metals or energy, whatever, you always trade prices. And that's the behavior of the price. Go back to the point of control. Yes, of course, I give you the indicator. I have a partner who developed this price indicator. So I put it in the chat box. And you can see it's in English as well. And there you can get this indicator. It's one of the most important things you can use for your own trading. Okay, so we have a lot of space to go for that. And the other one is US dollar Swiss franc. So we had here a price. That was the indicator by itself, or the expert advisor by itself, because we saw the correction, at least more than 38%, a little bit, and then the balance candle here, and the balance candle here, and then go down. We were a little bit in the plus, and since then the price go back to the unfair value zone, but my stop is placed above the last 0.3 here, and we will see what will happen. But something happened today in the market. So you can see, first of all, we had a loser in Australian dollar, Japanese yen. So what's happened there? So let's see, I will draw it for you. So here we go. So first of all, we realized a trend, a new uptrend. Movement, correction, movement. So then we had the correction. So we saw our balance candles here, and we got into the trade. Absolutely fine. every rules were fit, and everything was okay. And of course, you can see the daily chart. We saw in daily chart at that moment, so come on, here we are. We saw a little bit stabilization here, or stabilization zone here. And on that, we are still deep in a green zone. Fair price is placed in daily chart, of course, 82 Japanese yen. So we had a great situation maybe to go up again by support by the daily chart. We used that in the hourly chart for that trend. I drew it for you, but at the end we placed our stop. Our stop were placed here, of course, here, and here we got out of the trend. And after that, the price went up again. It's like the cams are watching us. So it's always the same. So that was a bad thing, but there was only one. We had another one. Look at this one. Euro Japanese yen. Same picture. I will draw it for you. Look at this one. Same picture. Movement. Correction. So then the big move. Then the correction here. Then we had here our balance candle, and we got into the trade. So and afterwards we had a stop loss a little bit deeper here, exactly there, and we got exactly stopped out there. Shit happens. Second one. And I guess with the third one, this was New Zealand dollar, Japanese yen. So we have in all Japanese yens, we have all the same signals. Support by the daily chart, and we have great signals in the hourly chart. And that is a great experience we made today. Sometimes it's called a cluster risk. You have a lot of signals in one currency pair in Japanese yen. Okay, it was a bad and sad thing that the Japanese yen is depending on the indices. But we had a signal. It's not, we don't have the permission to choose between the signals. This one I will take, this one I will not, this one I will take, and this one I will not. If you have signals, you have to use it. Whatever it takes, you have to use it. Sometimes if you have a cluster risk, because you have a lot of signals in the same currency, then you have to reduce your risk. That's a possibility. That's a real good possibility. But it's not allowed to choose between the trades. This one I use, this one I don't use. That's not allowed. If the rules are fit, and if you see that the rules shape in your trade, and you got a signal, you have to use it. Sometimes it's really shit. Sometimes it's really bullshit. And sometimes you see, we stopped exactly there. And after that, the trend, or not the trend, the price went up again. So, why shouldn't we go inside the trade immediately after that? There's one rule. You don't have an uptrend. The trend is broken. Of course, the trend is broken. And rule number one says, you know rule number one? Rule number one means you need a valid trend. No trend, no trade. That's really important. So what should we do now? 3 trades, losses, 3 trades failed in a row. Guys, normal part of the game. That's called drawdown phase. It's a part of the game. And you have to accept that. But as you can see, in 1 or 2 trades we are still in. Canadian and Swiss franc. No, here we're not. Oh, that's the other one. You look at this one. Exactly stopped out, and actually we are in the plus. We would be in the plus, but actually we got out. But it was correct. We set our stop here, because you need to use a stop always, but it's not a problem. So you see, by example, this one. Now we have again We have again here our stabilization phase. It's great. Maybe we will get the next trading chance here. Due the next 1 or 2 days, where's the problem? Wait for your signals. Wait for your rules. Maybe we'll see the next correction and then the next trend. And you can see in all Japanese yen, we have so many space to go. And if the price will go up, we can do the same in all Japanese yen currencies again. And we will recover. And that's the point in trading. It was not our fault. We stuck to the rules. We didn't intervene into the trade. We let the market decide what happened. And today we had a stupid day. Okay, sometimes it is. It's a part of the game, but it's not your fault. And the worst thing you can do now is to switch the rules. You cannot, so just a moment please. You cannot avoid to make losses in trading because it's a part of the game. So wait for all new signals in trading. So and all that the other stuffs here you can see in silver. We wait for a next trend, maybe the same US dollar Swiss franc we are still in, and if you will go out here or get out of that trade, we have to try it again. And we wait in New Zealand US dollar again for a new uptrend, because this is a great stuff, great opportunity here, because you see same picture in daily charts. So you see that great support zone here. It's a great support zone here. We are so far away from the point of control here. We have so many spaces to go. Look at the 0.7272. Actually, we are at 65, almost 800 pips to go. So we have to use that situation by maybe hourly chart or maybe daily chart as well. But in hourly chart, we can wait if we will see a new uptrend, and then we can work with that. So in hourly chart, you can see we have the same, a lot of space to go. Point of control is placed 86. We are still at 65, almost 300 pips to go, and then we are still on track. So wait for your trend. If you have any question, please, if I can see your hand, please type it in the chat box. I can see it. You have in GoToWebinar, you have a chat box, a question box. Please type in there like Farouk or Vincenzo did it. So if you have questions, please ask me. This is your webinar. There are no secrets in trading. I want to share all my experiences with you because I'm absolutely convinced that you are the one guy who can become a successful trader. But it's up to you. If you follow my advices and follow my words, you have a great opportunity to get successful in trading. But it's up to you. You have to stick to the rules. You have to be willing to change your mind, to make personal development. And of course, you have to switch your mindset. Then you have a great opportunity and chance to be successful in trading. Maybe you struggle right now with your trading. Maybe you feel pain in your trading right now, because follow the rules. Trading as itself is really easy. It's not a rocket science. The real challenge is taking place in your mind. For that, you need a coach or a community that will help us, like us here in Admiral Markets. We can do that together. But you have to stick to the rules always, guys. Okay, next one. New Zealand, Japanese yen. Okay, we stopped out here. We have to go long at the next situation when we see the next trend still on the watch list. So British pound, Australian dollar, that was the same procedure. We stopped out and after that the price went up. This is really called a stupid drawdown phase, But to be honest, guys, I'm so grateful. Now you will think, oh, what's that, you're a stupid guy. He said he's grateful about the drawdown phase. Yes, of course. Do you know why? Every no the market, every single no of the market brings you closer to your next winner. It's the law of big numbers, always. We have one of the most nature things in trading. We use prices, nature thing. We use trends, absolutely nature thing. We use Fibonacci, the most natural mathematic row in the universe. That's all. We only use natural things in trading, and they will be successful on the long run. Why people failed in trading is not about the market, it's about our minds. So sometimes the drawdown phase, we know we need it because we need the next winner. And every no of the market brings you closer to the next winner. So I'm always grateful for every no of the market, because then I know my next winner is very close to me. Because at that moment, you push the button and you say, okay, everything is fine. My big picture is fine. I stick to the rules. I have my risk money management. Everything is fine. And you push the button to get into the trade. You cannot know what will happen next. Sometimes you have a loser. Like today, we have 4 losers in a row. My God. The drawdown phase. No more, no less. It doesn't mean my life. It's just only trading. Just only trading. Doesn't mean my life. And it doesn't cost my life. Just only calculated money. And I know after that, the next winner is very, very close to me. My job is to stick to the rules always. If I have next signal, I push the button again. And that's the real secret in trading. Please demonstrate how to put a stop loss. Thanks. It's like a game of numbers. Yes. Demonstrate how to put a stop loss. Of course, I will show you. It's about MetaTrader or about my trading approach. So I can show you about my trading approach for, let's see, maybe here. I will use another one, just a moment. So here we go, not that. I want to use that one. So, okay, I will draw it for you. Look at this one. If you make trend trading, you see, I figured out my trend, movement, correction, movement. Then we had the correction, stick to the rules. There we had our balance candle, and we got into that trade. At that moment, we cannot know what happened, what will happen. So we count on the trend continuation, and the trend is valid, and the stop must be placed a little bit below the last 0.3 here. Why exactly there? Of course, if the price will go below that 0.3, the trend is broken and the setup is over. And that's the point you have to choose, and you have to set your stop loss. After or below, or if you have a downtrend above the last 0.3 or the last high. So, assuming the price will go up, and make the next correction, and the next movement, and the next correction, and the next movement, you set your stop and you trail your stop from point 3 to point 3 to point 3. Here we go. That's the real behavior, how you use your stop loss. And of course, if you set about MetaTrader, your stop loss, you have to take a new order here on the upper side. Oh, here we go. Here we are. So you figured out where is your where you place your stop. Maybe that's the number 71.646. So, and here you type your stop loss in the MetaTrader here. You take profit. If you want a market order or a pending order, whatever you want, your buy limit. I don't work with the limits. I always buy stop or sell stop because I left with stop in or stop in, long or short, and that's trading. So that's the point you can see. You can type your in the chat or in the display box here to stop loss. But about the trading approach, your stop has always to be placed below the point 3 or the last low. So we had a great opportunity. I will show you how we did that in Euro Swiss franc. Maybe you remember that trade. Let's see. So here we go. So let's see. Swiss franc. I must see where the trade. Here, Euro Swiss franc. Oh, here we go. So you see, here we are. So you can see that in the screen right now. I will demonstrate it for you. So at that moment, here we are. We had, look at this one, the trend movement, correction, then the next move, then the next correction, then we had the trend, there was the balance candle, and we got into the trade. And you see, that was our win-winners. And that's the point I wanted to tell you. You cannot know what will happen after you push the button. But as you can see, the point of control at that moment were placed here. And we reached it already. So, and we worked with our trade with the stop here. We started here with the first stop. Then we trailed it up. We trailed it up here. Then here. Then here. Here we go. There. And then up here and here. Always after last correction, we trailed the stop. We let the market decide what happened. Here we reached our first target. Here, then next. Here was the trade. The last stop were placed here, and here we got out of the trade. So as you can see, that means we had at the end, we had a winner of 111 up to 114, almost 300 pips with one trade. So you see, we lost maybe 50 or 100 or 150 pips today with our losers, but you see, that's a trend. But you only can make this experience if you let the market decide what happens. You cannot know. Trust the trend and trust the price. That's the real point in trading. And as you can see, it works. The trend and the price, it works. And that's I hope this is the answer of your question, how you trail, and your first stop is always placed here. Let's see again. So your first stop is always placed below, in an uptrend of course, below the last point 3, and then at the end you trail your stop always last point 3. Trailing stop, trailing stop, trailing stop. A little bit space below the last point 3, a little bit space, not exactly. Don't do that. Not exactly. A little bit of space and let the market decide what will happen. This is a great experience we made together in trading if you follow the advices in trading. So, and this is part of the game, guys. And I want to talk in the last minute with you about a special topic. Here in that mind, you know, that's the market, that's master the market. And to master the market, to cope that challenge, you have to think about really important things. Trading is one thing. Trading is based on rules. But as I told you and I tell you every week, you need a business plan. And today I want to talk about your final goals. So let me ask you a question. What's your real goal in trading? I know the answer. I know your real goal in trading is, of course, it's easy. You want to make money. But do you all respect, would you really be here in that webinar at that time if you would be successful already? Because if you would be successful in trading, I'm really sure you wouldn't spend your time with me, a stranger. You wouldn't do that, because you would spend your time with your family, or with your friends, or on the beach, or something else, or on a cafe, or restaurant, wherever. I guess you need information. And this is a real information. It's a really important information. That's the great question. What's your real goal? Still making money. Of course, you all want to make money. But at the end, you can make money on a short run, of course. But often it's like an accident. Can you repeat it again and again and again? Can you do that? Only you can give you that answer, because I don't know you. So where is your real goal? And above of that question, there's one other question. What's your real why? Is it money? At the beginning, if you are a starter, of course, it's always money. But money cannot be the real motivation. Otherwise, you would never break the rules. And would make money, and would be money the real motivation in trading, you were successful already. Be honest. So what is the hard point? What is the real challenge? It's kind of the business plan. Figure out what's your real why. What will give you so much motivation that you will never break the rules, that you'll be always disciplined, that you will always, or that you never break the rules and never intervene into that trade. What's your real why? And this is part of your goal. What's your financial goals? What's your private goals? There's a big difference. There's a big difference between financial goals and private goals. Okay, maybe you want to make money, let's see, 100 euros a day, 100 euros a month, of course. But what's your private goals? What do you want to reach with that money? Do you want to spend it for your wife? Do you want to spend it for the kids? Do you want to spend for the better education for the kids, a better school, university, whatever? You know? What's the real why behind that? Making money isn't the real why, because otherwise you would never break the rules and you wouldn't be successful already. So, and I guess you know that feeling to lose money in trading. So how does it feel? How does it feel if you lose money? Does it hurt? Do you feel pain? Maybe not in the beginning. So you know, okay, it's okay. But at the end, if you lose more money than you win, then you feel pain. And then it hurts. And then, come on, be honest. Then you struggle with your wife. You struggle, you're fighting with your family. Because you spend a lot of hours on the PC for that fucking game. And at the end of the month, you lose money. Maybe more than you can afford. That means stress. That means family fights. So as you can see, money cannot be the real why. So find your real why. And that's the big question. Write it down on a paper. Put it on the wall. Put it on your screen. What's your real why in trading? Find it. Find your real why. And then you figure out what's your real goals in trading. And then you can think about how I can really make money in trading. What's your private goals? And let me tell you at the finishing for that webinar, last 1 or 2 minutes. Real trading, guys, wherever you are, I'm so grateful wherever you are that you be a part of that webinar. Trading means you are on a journey. A journey. Trading means a journey. So, what's the target? What's the goal? What's the aim of that journey? There isn't an aim. The journey is the real target. So you will make so many experiences on that journey with yourself, with personal development. You start with the fact to accept the inevitable things. You figure out you can do whatever you want in trading. At the end of the day, you will lose money. But the point is how you can make more money than you will lose. And there's a way. Have rules, of course. First of all, have rules. And start with your business plan. So that's your task. That's your home exercise for the next 5 days till Wednesday. Oh, not next Wednesday, because I'm on Cyprus next Wednesday. In calendar week 22, I'm back here. So, because I have a great webinar next Tuesday evening. So that's your exercise for the next 2 weeks. Write down your own business plan with that questions you can see here. Who you are, what's your strengths and weaknesses, what's your risk, what do you have, you can read it by yourself, what's your goals and how you can reach it, what's in your mind, and overall, it's the main topic at itself, what's your real why. And that means that webinar series, Master the Markets. If you have any questions, you see tomorrow this webinar on YouTube, Admiral Markets, or in my YouTube channel. If you have questions after the webinar, send me an email. Write it down below that video. But figure out what's your real why, guys. We will see each other in 2 weeks, not next week, in 2 weeks. I'm so grateful that you'll be here, that you was here in this webinar. I want to wish you a nice evening, have a nice evening, and with a lot of interesting thoughts in your mind. Maybe you learned a little bit about today, about this webinar, and so on. I wish you a nice day. We will see each other, and take care. And, of course, be careful about your thoughts, because they are the beginning of your actions. With this in your mind, bye-bye and take care.